Okay, we're going to get started. Good morning again, and thank you for joining us. We are excited to kick off the Fiscal Training webinar series this morning. And our first presentation of the series is the Enrollment, Attendance, and Fiscal Reporting Requirements webinar, which is the first of 10 pre-scheduled presentations for fiscal year 24-25. This presentation and webinar series is being presented by the California Department of Education's Early Education and Nutrition Fiscal Services Unit of the Fiscal and Administrative Services Division. So for those of you that do not know me, my name is Corey Kahn. I am the manager over the Early Education and Nutrition Fiscal Services Unit. And today I am joined by the EENFS fiscal analysts and managers who have been busy creating and updating these presentations that will be used for the webinars over the next 3 months. So just a few housekeeping things. We have disabled the chat box for participants. Although EENF staff may use this feature to share links with you there. So I believe only the panelists here will be able to use that feature. I know many of you are interested in receiving a copy of this presentation. This presentation is being recorded and we'll work on getting the recording posted in the next coming weeks. Okay, so our team is committed to being as responsive as possible, but most likely will not be able to answer every question. Please utilize the Q&A feature to ask us questions. And when you do ask questions, please give as much detail as possible before clicking that submit button. Most of the time, you know, we might be on to a different topic, but you asked it during that topic. And so if the staff here don't get to the question before we move on, we won't know the context in which you ask it. So having as much detail as possible is the best. So at the end of this presentation, we will have a manager, Yashima Daniels. She will facilitate a live Q&A session. She'll go over some frequently asked questions that have come through during the session, or participants will be able to raise your hand, and then we'll call on those that have raised their hand to speak and ask the question, and we can answer that live. So if we aren't able to get to all of the questions, we'll take them back and try to reach out to you later, or we may use them to develop frequently asked questions that get posted on our website. So before we get started, we'd like to request that all participants update their name in Zoom. So that's what is shown on this slide. So this will allow us to help track questions that have come through and follow up with your question if it was not answered during this webinar. And so to update your name in Zoom, I believe you should be able to open the participant link at the bottom of Zoom, hover over your name, and click rename to enter your new name in the following format. So first name, last name, agency name, or vendor number. So essentially we just need you to be able to identify you to an agency. And then you should be able to click OK from there. So now I'm going to turn it over to the presenters for this morning, and that is Kiana Slaughter and Asadia Ross.
Thank you, Corey. My name is Kiana Slaughter, and I'm a fiscal analyst within EENFS. I am joined by my colleague, Asadia Ross, and during this presentation, we will discuss enrollment attendance source documentation, as well as enrollment and attendance reporting. Then we will discuss fiscal source documentation and fiscal reporting. So during this portion of the presentation, we will be going over the following: enrollment and attendance support documents, a walkthrough what source documents feed into the EE&FS enrollment attendance report, where to access enrollment and attendance report by navigating through CPARAS, and enrollment and attendance reporting, how and where to report child days of enrollment, CDEs, and clarifying a day of attendance versus a day of operation. While enrollment and attendance are currently not a basis of reimbursement due to hold harmless, it is imperative that this data is reported correctly. This information can be used for analysis and legislative decisions. Enrollment and attendance reporting and source documentation. Various documents are used to determine days of enrollment and days of attendance. This flow chart illustrates how source documents feed into the EE&FS reports submitted to CDE. Source documents include the family file, which contains the notice of action, which determines the certified time-based category, the sign-in and sign-out sheet, which determines the child days of attendance. Then there's the best interest day tracking log. This verifies the child doesn't exceed total best interest days allotted for the fiscal year. And then there's the CD 9400, which is a bridging document between all the source documents and the EE&FS enrollment attendance and fiscal report. The EE&FS enrollment attendance and fiscal report is the basis of reimbursement for your contract. It is extremely important to ensure that all source documents can justify contract reimbursement. Days of operation. A day of operation is the day that the contractor provides services to at least one enrolled certified child. Minimum days of operation, referred to as MDO, is the number of days required to serve certified children. MDO is based on the program calendar that was submitted with the CFA package for existing contractors, continuing services, and in the RFA package for contractors who were awarded a preschool contract recently. Staff training days do not count as a day of operation when the contractor is not open to provide services to certified children. For multi-site contractors, service at any one site is considered a day of operation. Any revision to the program calendar must be submitted no later than June 30th of the fiscal year to your PQI consultant. Here is an example of a program calendar. This calendar is submitted with the continued funding application, referred to as the CFA, or with the request for application package, referred to as RFA. Contractors indicate the days in which they plan to be open for the fiscal year, and the program calendar displays the total days of operation for each month, with a summary at the bottom that captures the total days of operation for the fiscal year. As a reminder, if any changes need to be made to the program calendar, a revised calendar must be submitted no later than June 30th of that fiscal year. Child days of enrollment. Contract terms and conditions, section 1 defines child days of enrollment as the total number of days every child is certified to attend a CSPP, regardless of attendance. This is the total of every child's enrollment for the days the contractor is open to provide services. Enrollment depends on eligibility. The notice of action is the source document which determines the days and hours of care for a child's enrollment. Here is an example of a notice of action, or NOA, which is a source document in the family file. The notice of action displays the date services are approved to begin, shows what program the child is enrolled in, shows days, hours the child is approved for services. In this example, the contractor wrote the times in which the child is certified to attend the program, for example, on Monday, 8 to 4:30. However, contractors are not required to write actual hours certified, but at the minimum do have to indicate how many hours the child is certified for. Using the Monday example, the contractor could have written 8.5 hours rather than 8 to 4:30. Reporting days of enrollment. Report the total days of,
Kiana, I
yes.
want to jump in because I see
Mhm.
people saying to slow down. So can you please
Okay.
slow down a little?
Yes, sorry. Okay, so reporting days of enrollment. Report the total days of enrollment for certified children on the enrollment, attendance, and fiscal report under the appropriate categories for the reporting period. Children can be reported under one enrollment category. For example, if you have a child that is 4 years old, but also a dual language learner, they should only be reported in one category. We recommend reporting in the category with the higher adjustment factor. There is a separate mental health services adjustment factor section on the enrollment, attendance, and fiscal report. For children in the classroom with a child receiving MHCS services, all children in that classroom would be reported under the MHCS adjustment factors. Children reported under MHCS adjustment factors should not be reported under non-MHCS adjustment factors. Next, I'll talk briefly about the updates that were made to the enrollment section of the 24-25 enrollment attendance and fiscal report in CPARAS. First, we will discuss how to report child days of enrollment in the various age categories. Pursuant to Senate Bill 163, CSPP contractors can enroll eligible 2-year-olds through June 30th, 2027. Education Code 8244 provides a 1.8 adjustment factor for 2-year-olds. This adjustment factor is identical to the adjustment factor for 3-year-olds. Therefore, the 3-year-old line in the fiscal year 24-25 enrollment attendance and fiscal reports have been updated to 2 years old and 3 years old. Contractors will report both 2-year-old and 3-year-old child days enrollment in this section. Reporting child days of enrollment, children turning 4. Previous reporting guidance stated that children reported in the 3 years old adjustment factor category must be ages 47 months or younger. Upon the child's 4th birthday, the contractor could begin reporting the child in the 4-year-old adjustment factor category. Effective fiscal year 24-25 through fiscal year 26-27, new guidance states contractors will no longer report a child in the 4-year-old adjustment factor category on the child's 4th birthday. They will continue to report the child in the 2 years old and 3 years old adjustment factor category for the entire fiscal year. So reporting child days of enrollment within the different age categories is based on the statutory age definition. A child whose 3rd birthday is on or before December 1st, 2024, is statutorily 3 years old and shall be reported within the 2 years old and 3 years old adjustment factor category for the entire fiscal year. Similarly, a child whose 4th birthday is on or before December 1st, 2024, is statutorily 4 years old and shall be reported within the 4 years old adjustment factor category for the entire fiscal year. So this table provides a few examples on how to report a child within the 2 years old and 3 years old adjustment factor category and the 4-year-old adjustment factor category for the fiscal year 24-25 enrollment attendance and fiscal reports. The first example is a child who was born on November 29, 2020, is statutorily 4, and therefore the contractor should report their child days of enrollment within the 4 years old adjustment factor category, which has an adjustment factor of 1.0. Our next example is a child whose birthday has a birthday of December 24th, 2020, is statutorily 3, and therefore the contractor will report the child days of enrollment within the 2 years old and 3 years old adjustment factor category, which has an adjustment factor of 1.8. Next, a child who was born on October 26, 2021 is statutorily 3, and therefore the contractor will report the child days of enrollment within the 2 years old and 3-year-old adjustment factor category, which has an adjustment factor of 1.8. And then lastly, a child with a birthday of January 21st, 2022 is considered a 2-year-old up to January 20th of 2025. Pursuant to Senate Bill 163, the contractor enrolled this child in CSPP on January 21st, 2025. This child is statutorily So the contractor will report this child days of enrollment within the 2 years old and 3-year-old adjustment factor category, which has an adjustment factor of 1.8. Now we'll look at the enrollment categories and adjustment factors for CSPP contracts. CSPP contracts allow for actual enrollment to be adjusted by special criteria adjustment factors. Special criteria factors recognize that different categories of children, dual language learner, exceptional needs, etc., require a special care or services, and that the cost for these services vary. On this slide, you will see the enrollment categories and adjustment factors for both non-MHCS and MHCS categories. Again, the MHCS adjustment factor applies to all children within a classroom or family child care setting when MHCS is provided to at least one child in the classroom. As previously stated, under no circumstances should a child's days of enrollment be reported in both MHCS and non-MHCS. Determining enrollment time base. To determine whether a child is reported as full-time or part-time, contractors should use the child's certified set schedule based on the full week of services. If the child is enrolled for less than 25 hours per week, the child days of enrollment will be reported as part-time, and if the child is enrolled for 25 hours or more per week, the child's days of enrollment will be reported as full-time. Children receiving at least full-time reimbursement and certified for 10.5 hours per day or more per day or more will be reported as full-time plus on the specific days in which they are certified to receive services for 10.5 hours or more. So for example, if a child is certified to receive services for 10.5 hours, 2 days per week, and 8 hours, 3 days per week, then a child is certified for full-time as the total number of hours for the week is more than 25. Each day in which they are certified to receive services for 10.5 hours or more will be reported as full-time plus, and the remaining days will be reported as full-time. So enrollment based on the notice of action. So throughout the rest of the enrollment and attendance portion of this presentation, we will use the certified services for 3 children certified as full-time 3-year-olds as our example. So you'll notice that although these 3 children are certified to receive full-time care, the composition of their services vary. So we have Teddy Bear, who is certified to receive 37.5 hours of care weekly and is considered full-time for all 5 days of the week, even though Teddy Bear is certified to only receive 3.5 hours of care on Fridays. Then we have Sky Cloud, who is certified to receive 45 hours of care weekly, which is considered full-time 5 days per week. Lastly, Rainfalls is certified to receive care 38 hours weekly, which is also considered full-time. Although Rainfalls will not attend the program on Fridays, their total hours for the week exceed 25 hours, and they will still be reported for all 5 days of the week. So days of attendance. Days of attendance are the total number of days that certified children are present in the program for any part of the day for which they are enrolled or have an excused absence. The days of attendance cannot be greater than the days of enrollment. This means that a child cannot attend a program for more days that they are enrolled to be there. The sign-in and sign-out sheets are the primary source document to determine days of attendance. Actual hours must be used when signing a child in and out. Full signatures must be used when signing a child in and out. For days when a child is absent, an authorized adult must sign the sign-in and sign-out sheet and include a reason for the excuse, and include a reason for the absence. The CD 9400 must reconcile to the sign-in and sign-out sheets and the EENFS report form attendance pages. So for example, if a child is marked absent on the sign-in and sign-out sheet, the absence should also be reflected on the CD 9400 and the enrollment attendance and fiscal report. So now let's talk about excused absences, which are also considered a day of attendance. Excused absences can be illnesses, quarantine, illness or quarantine of their parent, a family emergency, or to spend time with a parent or other relative as required by a court of law, or that is clearly in the best interest of the child. Education Code Section 8205. Best interest days are also considered an excused absence and are limited to 10 days per child per fiscal year. The 11th day and thereafter must be counted as an unexcused absence. This means that if a child is going on vacation for 3 weeks and has not previously used any best interest days, the first 2 weeks of vacation would be considered an excused absence, and the third week would be considered an unexcused absence. You may not use best interest days as an excused absence if the child no longer attends by the termination date of the notice of action has not passed. Excused absences policies must be outlined in the parent handbook. So here's an example of a sign-in and sign-out sheet, which is the primary source document for reporting attendance. Contractors should verify that full signatures and actual times are being used when signing children in and out. For days when a child is absent, there must be a signature from the authorized representative of the agency if the parent called in, or a signature from the parent or guardian upon the child's return to the school. In addition to the signature, a reason for the absence is also required for it to be considered an excused absence per Title V, Section 17819. So for example, if the parent or teacher had not signed and indicated a reason for the absence on 9/4, it would be considered an unexcused absence. Because all required components are present on the sign-in and sign-out sheet, the signature and reason for the absence would be considered an unexcused absence and therefore will be reported as a day of attendance. In this example, the use of the best interest day should also be tracked in the best interest day tracking system. If Teddy Bear had already utilized 10 best interest days, then this could not be counted as a day of a best interest day and would instead be an unexcused absence. The absence on 9/30 is also excused because the child was sick, which is an excused absence, reason. And the teacher has signed indicating that they received notification from the parent regarding the reason for the absence. So here's an example of a best interest day tracking log. This example tracking log is child specific. Contractors' best interest days trackers do not have to look exactly like this, but it is a requirement to track all best interest days. Contractors should verify that any best interest days identified on the sign-in and sign-out reconciles with the best interest day tracker and that the child has not used more than 10 best interest days. Now let's look at another sign-in and sign-out sheet for SkyCloud. Similar to Teddy Bear, SkyCloud also used the best interest day on 9/3. This should be tracked on the best interest day tracking log. There were no other absences for Sky in the month of September, and the parent signed with the full signature in actual times when signing Sky in and out for the rest of the month. And finally, Rainfall sign-in and sign-out sheet. If you remember, Rainfalls is certified to receive care Monday through Thursday. You'll see that every Friday is indicated as a day of no services, as Rainfalls is not certified or enrolled to attend on Fridays. 9/11 is an absence with no reason provided and no signature of an authorized adult, meaning that the absence is unexcused. Later in the month, Rain was sick, and that is indicated with a reason and a signature indicating excused absence for those 2 days. Like the best interest day tracking log, contractors can create your own CD9400. However, the CD9400 must contain all required fields, such as a key, identifying information like the agency name, the site, or in the month, and a certified signature. The CD9400 records the days of enrollment and attendance for every child enrolled in the program, which reconciles to the sign-in and sign-out sheet. Every day a child is expected to be in attendance per the notice of action is a day of enrollment. Every day a child is present or has an excused absence is a day of attendance. If a child attends every day that they are expected or enrolled to be there, the days of enrollment will be equal to the days of attendance. If a child has an unexcused absence, the days of attendance will be less than the days of enrollment. For example, if you recall Teddy Bear's sign-in and sign-out sheet, it indicated a holiday on the first Monday of the month, usage of a best interest day, and an excused absence. So you'll see for Teddy Bear, there is no day of enrollment for the holiday, as the school was not open to provide services and they were not expected to attend. We can see the B recorded for the best interest day use, which counts as a day of enrollment and attendance. And then lastly, an EA is used for the Monday that Teddy Bear was sick, but the absence was excused, which counts as a day of enrollment and attendance. The CD9400 reconciles with Teddy Bear's sign-in and sign-out sheet. This process would need to be done for all children enrolled in the program. Using the same reconciliation, SkyCloud had 20 days of enrollment and 20 days of attendance, which includes the one best interest day used on 9/3. And then finally, for Rainfalls, you may notice that Rain also had 20 days of enrollment, but only 19 days of attendance. This was due to the one unexcused absence on 9/11, where there were no reason provided and no signature of an authorized adult. So once the CD9400 has been completed, this form should be used to enter the data until the enrollment, attendance, and fiscal report in CPARES. So where to access the enrollment and attendance reports in CPARES? First, you'll log into CPARES. You'll navigate to the reporting tab, and then from the drop-down list, select all report forms. That will then lead you to be able to select the month or quarter that you are reporting enrollment in attendance for. So once selected, select the first tab labeled as enrollment and attendance and input the data. Reporting enrollment and attendance. Enrollment and attendance is the first tab of the enrollment, attendance, and fiscal report that is completed and certified in CPARES. If providing services to children with mental health services, select the applicable radio button at the top of the report for certified children or non-certified children receiving MHCS. Using the CD9400, enter the days of enrollment and attendance in the current period column. You'll verify that the children are reported in the correct category, such as 2 years old and 3-year-old, in time-based category, full-time or part-time, per the notice of action. Using the three children reviewed throughout this presentation, we can see enrollment reported in the 2-year-old and 3-year-old full-time category of 60, which is the sum of the total days of enrollment for all 3 children. The adjustment factor, the adjusted days of enrollment auto-populates in the cumulative fiscal year column. At the bottom of the report form, the total days of enrollment will auto-populate based on the data entered in the current period. Days of attendance do not auto-populate and must be manually entered in. This data should come from the CD 9400. In this example, we see that the days of attendance is less than the days of enrollment due to an unexcused absence. So reporting non-certified enrollment. So for instances where a CSPP contractor commingles with non-certified children or private pay families, the contractor would complete the non-certified enrollment section. Non-certified children should be reported if services are provided in the same classroom and at the same time as certified children. It is important to note that if a program included non-certified children, the CDE will prorate the total program cost to determine the appropriate amount to be reimbursed. We will go into greater detail when we review the earnings calculation worksheet in next week's presentation. So days of operation for the reporting period will need to be entered on the fiscal tab of the enrollment attendance and fiscal report. Again, a day of operation is a day that the contractor is open to provide services to at least one enrolled certified child. The days of operation should reconcile with the program calendar. In this example, 20 days of operation are being reported. 20 is the number of days the contractor has indicated they will be open to provide services in the month of September. Now let's go over some ways to ensure accurate enrollment and attendance reporting. Implement desk procedures. Procedures should specify who is responsible for what task and how often a task is to be completed. For example, the teacher may be responsible for reviewing the sign-in and sign-out sheets. Procedures are helpful when an employee is out and can assist management with monitoring tasks and or modifying procedures as necessary. You'll want to reconcile periodically to ensure the days of enrollment and attendance are being reported accurately. This means reviewing source documents such as the sign-in and sign-out sheets, the best interest day tracking log, the CD 9400, and the enrollment attendance and fiscal report form. Reviewing the fiscal handbook for guidance. EENFS fiscal handbook is intended to provide reporting requirements and guidance specific to the contract year. And then you can also reach out to your fiscal analyst for technical assistance. I will now turn it over to my colleague, Asadia Ross, who will be walking you through fiscal source documentation and reporting requirements. Thank you.
Thank you, Kiana. Good morning, everyone. My name is Asadia Ross, and as Kiana stated, I will be discussing the fiscal source documentation and reporting requirements. In this section of the presentation, we will be discussing record-keeping requirements, cost allocation plans, what they are and when you should have one, steps to access the Fiscal tab of the report in CPARIS, fiscal reporting, specifically looking at some of the revenue and expense fields on the Fiscal tab of the Enrollment, Attendance, and Fiscal report. Lastly, the presentation will end with some fiscal reporting reminders and a discussion of best practices. On the screen is a diagram showing the various fiscal information sources that feed into the fiscal portion of the Enrollment, Attendance, and Fiscal report. Various sources, such as accounts receivable, family fee receipts, and accounts payable, feed into the general ledger. The general ledger then feeds into the report form. Contractors should think about the flow of the processes at their agency to ensure that the data being reported is accurate. There should be checks and balances prior to the information being entered in the general ledger and subsequently transferred to the enrollment, attendance, and fiscal report. An example of how that process might work would be the fiscal director having a procedure in place to review the general ledger periodically to verify that items are being categorized correctly. For fiscal staff, remember that anything recorded in the general ledger should reconcile to its source. If you have a cost allocation plan, that will also impact how your expenses are being reported. As Kiana mentioned, the enrollment, attendance, and fiscal report is the basis of reimbursement for your contract. It is extremely important to ensure that all source documents can justify contract reimbursement. Both Education Code and Title V contain record-keeping requirements. Pursuant to Title V of the California Code of Regulations, Section 17820, claims for reimbursement shall not be paid unless there are documents to support the claims. It is the contractor's responsibility to provide supporting documentation for reimbursement. Contractors must have documentation to support their claims for reimbursement. The expenses claimed should be accurate. Upon review, our office should clearly be able to tie what is reported to your records, whether that be from your general ledger, from a profit and loss statement, or from your accounting software. The length of time that you keep your records is governed by Education Code Section 33421, which states all original records shall be retained by each contractor at least 5 years, or where an audit has been requested by a state agency, until the date the audit is resolved, whichever is longer. Now we will discuss cost allocation plans. For a cost allocation plan, contractors shall maintain written documentation of the rationale used in determining direct and indirect cost. The cost allocation plan identifies the appropriate amount of expenses to be ascribed to a program if operating multiple programs. This means that if you operate a CDE and a DSS program, the cost allocation plan must identify the cost to be allocated to each specific income source. As an example, if you are a co-located program, some examples of when a cost allocation plan would be applied would be for a program director's salary, or rent, or utilities. The cost allocation plan should be reviewed by a CPA prior to implementation. If contractors are unsure of when a cost allocation plan is needed, they should have their CPA contact the Audits and Investigations Division for general guidance. The cost allocation plan on file must be made to CDE staff upon request. You can find more information on the cost allocation plan and requirements in the CDE audit guide. Now that we've gone over what a cost allocation plan is, we'll look at when to cost allocate. Depending on the structure of your program, you may or may not be allowed to cost allocate. Cost allocation should occur when the amount received for non-certified children greatly differs from the CSPP reimbursement rate. A CSPP classroom is commingled with children certified in another DSS program. A CSPP classroom shares the same facility with non-CSPP classrooms, meaning that they are co-located. When claiming indirect expenses, or when Head Start funding is used to provide a full day of services to children enrolled in a part-day CSPP program. There must be an allocation plan to accurately report the appropriate costs for each program. In the example of a co-located program, some of the facility and staffing costs are shared, such as electricity, rent, and salaries. And a cost allocation plan is required so that the related costs for each program are accurately reported. Remember, if you are claiming indirect expenses, you must have a cost allocation plan and use that to report your expenses. As Kiana walked you through how to access the enrollment and attendance portion of the report, we will now discuss where to access the fiscal portion of the report in CPARIS. To access the fiscal tab of the Enrollment, Attendance, and Fiscal Report in CPARIS, you would follow the same steps by clicking on the reporting form as indicated by the arrow on the screen. Then select the Fiscal tab instead of Enrollment and Attendance. This will bring up the fiscal page for the CSPP Enrollment, Attendance, and Fiscal Report, and you can begin entering the fiscal data, which we will look at on the next couple of slides. On the screen is the Enrollment, Attendance, and Fiscal Report that Kiana showed you earlier. We are now looking at the revenue section of the report, which is on the Fiscal tab. As a reminder, data will be entered for the current period, which is the column in the middle. Revenue should only be reported in this section when the corresponding expenses are reported. Data in the cumulative fiscal year column will auto-populate based on data entered in the current period. We are going to take a look at some of the revenue lines, but not all of them. First, we'll look at the Restricted Income Exceptional Needs Severely Disabled Service Level Exemption Credit line item. This is the credit that contractors received if they did not meet the 5% set-aside requirement to serve children with exceptional needs or severe disabilities. If contractors did not spend the Exceptional Needs Severely Disabled Service Level Exemption credit in the fiscal year in which it was calculated for, it is now considered deferred revenue. We'll have a presentation later in the series where we'll discuss the Exceptional Needs Severely Disabled Service Level Exemption credit reporting requirements in more detail. Similar to the Exceptional Needs Severely Disabled credit, contractors also received allocations outside of contract that were paid with ARPA funds. If these funds were not expended within the fiscal year in which they were allocated, these funds also become deferred revenue. Contractors are encouraged to spend these funds before contract funds. Family fees collected for certified children. On this line, contractors will report the amount of family fees that were assessed and expected to be collected. For example, if the total assessed fees are $4,200, but only $3,500 were collected that month for any reason, such as late payments from families, the amount reported on this line will still reflect $4,200, which is the amount that is assessed and expected, even though the total amount has not yet been collected. Interest earned on apportionment payments. If contractors have placed apportionment payments in an interest-bearing account, which is not required but is an option, interest earned on these funds, whether they are contract funds or CSPP allocations provided outside of contract, must be reported on the interest earned on apportionment payments line. Remember, if you have a reserve account, which we will also cover in a later presentation, interest for those reserve funds should not be reported on the fiscal tab of the Enrollment, Attendance, and Fiscal Report. Unrestricted income, including fees for non-certified children. If you have non-certified children reported, like Kiana showed you on the non-certified enrollment page, you should have unrestricted income for non-certified children reported here. Now shown on the screen is the reimbursable expense section of the Enrollment, Attendance, and Fiscal Report. This section is where you will report program expenses. A new line was added to the reimbursable expenses section for contractors to record any direct payments to subcontractors received through cost of care plus allocations and one-time only allocations. In this section, I've highlighted categories 1,000 through 5,000. As a brief overview, you will see that these categories include certificated salaries, classified salaries, employee benefits, books and supplies, and services and other operating expenses. We will dive more into reimbursable expenses when we have our webinar session on understanding the calculation worksheet next week. If your agency was approved for startup, the line highlighted is where those expenses would be reported. Startup should not be reported in any of the categories above, as this would be double reporting. Next, we'll look at the indirect cost line. This is where indirect costs are reported. Keep in mind that indirect costs are included in your reported administrative costs, not in addition to. The indirect cost rate percentage for your agency is a separate field above the indirect cost line, which will be auto-populated for you. Please note that this percentage only shows if there are indirect costs reported. If you are a local educational agency or LEA, you may have a negotiated indirect cost rate. The maximum indirect cost rate for an agency with a negotiated rate is the lesser of the negotiated rate, or 10%. For non-LEAs or community-based agencies, the indirect cost rate is capped at 10%. This line highlighted is where you report your administrative cost. These administrative costs are not in addition to the expenses indicated above. The administrative costs should already be reported in each specific category in which the administrative tasks occurred. This line represents how much of the total expenses reported are administrative costs. Essentially, this line is just calling out the amount of administrative expenses that have already been included in the line items above. Next, we'll look at the line where staff training costs are reported. These staff training costs are related to staff training days where the contractor is not open to operate, meaning no certified children are being served. These costs are reported in the applicable categories above, but are separately identified on this line. This is similar to how administrative costs are called out separately. Another new line item on the report is the total exceptional needs severely disabled service level exemption credit expenses line. Similar to the administrative costs and staff training expenses, this line is just calling out the amount of expenses tied to the exceptional needs severely disabled service level exemption credit included in the lines above. As mentioned earlier, there will be a presentation later in our webinar series where we will go over the exceptional needs set aside in more depth, including reporting requirements. Now we will discuss equipment inventory. A physical inventory of the property must be taken and the results reconciled with the property records at least once every 2 years per Title V, Section 3946, and the California and CFR Section 200.313, Section D2. This must include all items purchased in whole or in part with state funds. This means that anything that is considered to not be expendable. We don't expect you to inventory your pens and pencils or things of that nature. However, if an item is reusable, such as a bookcase, a table, a chair, desktop computer, iPad, items that last some time and are physical assets, this will be considered equipment, and if purchased with state funds, even if part, must be included in your inventory. There is not a dollar amount or threshold minimum that determines what equipment should be included in the inventory. If the item can be classified as equipment and is purchased in whole or in part with state funds, then it should be included within the inventory. You can refer to the School Accounting Manual, Procedure 770, for further information. All equipment must be issued a serial number and must be tagged. This is a serial number that is created and managed by your agency. It is not the serial number that comes on the product itself. So if you purchase a computer, it won't be the serial number that's created by the manufacturer, but a serial number that is created by your agency and tagged on the item, whether that be via a sticker, pen and marker, etc. Seen on the screen here is an inventory guide. The Early Education and Nutrition Fiscal Services Office, in consultation with the Audits and Investigations Unit, developed the following chart showing examples of what is and is not considered inventory. Some examples of inventory include appliances such as dishwashers or refrigerators, furniture such as tables, chairs, and shelves, electronic devices such as iPads, laptops, office equipment such as printers and copy machines, outdoor play equipment such as tricycles or water tables, outdoor structures such as sheds or shade structures, vehicles such as vans or buses that are used to transport children. Things that are not considered inventory include bedding like blankets or pillows, instructional materials like books, blocks, or puzzles, supplies like paper, crayons, or pencils, as well as utensils. Please note that this is not an all-inclusive list and that the chart is only meant to be a guide. If you have any questions about items not addressed within this chart, please reach out to your PQI consultant. Here you can see the equipment inventory form. This is the form currently available on our CDE website, but it is an older version of our forms. You can create your own equipment inventory form. You must just ensure that it includes all of the fields that are included on the form that we have as well. This includes the contractor legal name and funding source, such as CSPP, the item description, meaning what the item is. For example, here we see two items listed. One is a desktop computer and one is a refrigerator. The item description includes the manufacturer of the item and what it is. The serial or identification number. Remember, this is the serial or identification numbering system that is created by your agency. The original cost, meaning how much the item was purchased for. The acquisition date, meaning the date that the item was received. The location of the item, so the site or headquartered office where the item is located. Use, meaning where the item is currently being used. So here we get more specific than just the location and want to see specific rooms listed. So if it's in an office, which office, or for classrooms, what classroom, or kitchen, playground, etc. Current condition, meaning the condition of the item. In the first example listed for the desktop computer, we see that this item is listed in good condition. Putting this information together from the first line item, if we go to classroom number 5 at B.L. Warren Preschool and locate the King Wade desktop computer, we should see a computer in good condition tagged with the serial number indicated on the equipment inventory form. The field to the far right is titled Disposal. This column would be utilized when equipment is either donated to another CDE-funded service provider, transferred to the Department of General Services, also known as DGS, or sold with the proceeds deposited into the Child Development Fund as restricted income. which would be reported on your enrollment, attendance, and fiscal report. If you are interested in utilizing the property transfer option for any of your equipment, contact your EED PQI consultant for further guidance. Lastly, you'll see the certification section, which requires a signature and date, which, just like all the other fields, also needs to be included on the version of the form that you may choose to create at your agency if you choose not to use this one. Please also note that a physical inventory of the property must be taken and the results reconciled with the property records at least once every 2 years. Now let's discuss how to ensure accurate fiscal reporting. First, implementing desk procedures. Desk procedures can be incredibly helpful. As Kiana mentioned to you, desk procedures can assist management with monitoring procedures to ensure staff are following the proper guidelines when preparing the report. Desk procedures are also incredibly useful in training new staff at your agency. While your fiscal analyst is able to provide technical assistance when new staff join your agency, there are internal processes that we may not be privy to. Having desk procedures allows new employees or someone filling in to complete the reports utilizing the processes that have been developed at your agency. That can include things such as what reports to pull, where the information is pulled from on those reports, and how that information should be included on the enrollment, attendance, and fiscal report completed in CPARIS. Maintaining thorough records is a key component of successfully running your program. Again, the burden of proof supporting your claims rests with the contractor. Please ensure that you are following general record-keeping requirements. Reconciliation should be performed periodically to ensure the revenue and expenses being reported are accurate and in compliance with contract requirements. If using a cost allocation plan, be sure that costs are assigned to the correct cost, objective, or activity. The cost allocation methodology should be revisited to ensure that it is still accurate. If part of your cost allocation is based on the percentage of subsidized and non-subsidized children, but the composition of the program changes significantly, the cost allocation plan needs to be revisited to ensure that the methodology is updated or is still the best choice. As always, contact your fiscal analyst for technical assistance. A helpful saying coined by one of my colleagues is, when in doubt, just reach out.